you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite low.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and today's video is going to consist of several forecasts that Zillow has made about the housing market going into 2024. Now, overall, I don't think that we can rely on anything Zillow says as a result of their overwhelming desire to have a monopoly over the housing market and overwhelming losses that they took during the end of 2021. And it was hundreds of millions, by the way, as a result of their estimate. So the reason why I'm bringing this video and their forecast to light is, shockingly, you guys, 50% of America accesses Zillow at least once a week. So there's still millions of people that are only getting their housing market information from Zillow. Imagine that for a second. So although I don't necessarily believe what Zillow is forecasting, I think most of their economists are saying the things that they're saying because they're paid to, I still think it's important to see what the #1 internet real estate company is saying. And you guys are going to cover things from interest rates to inventory, what's going to happen with buyers, what's going to happen with sellers, the top housing markets, and things of that nature. And if you guys can, for me putting this effort together, shoot me a bonkers below. And while you do that, hit the like button. Don't forget to hit notifications for the love of all that's holy. And do not forget, I love hearing from you. So comment below. A lot of people read what you guys are saying. So again, for everyone that is commenting, sharing your insights, I wanted to let you know that from the bottom of my heart, I definitely appreciate you. And thank you for being part of the community and helping it grow. So we'll read 2 Zillow articles. The first article is Zillow's chief economist, who's being paid by Zillow, 2024 housing market resolutions. So this is Zillow's chief economist, Skylar Olson, and they're going to share her wish list for a healthier housing market in 2024. And I bet you part of, in their opinion, of a healthy housing market is them winning the recent lawsuit that they opened against MLS. Interesting. And the reason I'm saying that is all of these companies are just juggernauts that want a monopoly over the data. Every single one of them. Anyways, back to the article. And this is a little bit funny. 2023 was a challenging year for home buyers. Mortgage rates rose to a 23-year high. Think about that. And the inventory crunch meant prices continued to rise in much of the country and made it difficult for each buyer to find a home that met their needs. And why did that happen, you guys? Why did we have such a fierce rebound? Well, one of the primary reasons was the March 2023 bailout. And the jury's still out on what Jerome Powell is doing, because we're not done with quantitative tightening. We don't know if that decision was good, but so far I'm thinking that the decision to bail out the banks in 2023 was not a good thing, but time will tell. I am hopeful that 2024 will be a breather year that kicks off a long healing process in the housing market. And in fact, the Zillow research team predicted just that in our annual predictions. Okay, so yeah, I like this. A healing process, a long healing process, that's probably realistic. More homeowners decide to sell. So again, what they're basically referring to is the golden handcuff effects, why we have such short inventory. And I'm going to tell you guys, there's 1.5 to 2 million people on the sideline right now that would sell their houses if rates were lower. And we get about a 30% increase of inventory when that happens because only 70% roughly buy a new house. A severe inventory crunch in 2023 kept home values rising, disappointing especially myself and first-time home buyers hoping for a break amid the slowdown. Rate lock. Homeowners who locked in long-term mortgages when rates were near 3%, being reluctant to sell and take on new mortgage with a much higher rate is a big reason why. We have seen early signs that rate lock is easing compared to pre-pandemic norms, and the deficit of new listings is shrinking. It's important that this trend continues to bring the market better in balance. And I'm going to tell you guys, remember, prices are being propped up by the limited amount of inventory. So when we have any type of healthy increase of inventory, prices are going to absolutely fall apart. We already see that in places like Austin, and we see multiple metro areas in Texas with year over year, and this is existing homes, with year over year existing home decline. And I believe as a result of the hyper supply in new home construction, it's sitting at 9.2 months of supply that's just being reported. We have way more homes being built than is actually being reported. I suspect we have closer to like a year and a half of inventory right now with new homes, and yet they're still building like crazy. Anyways, moving back into the article. And appropriately, next paragraph is build, build, build. The other way to get more homes on the market is with new construction, which we've been following intimately for about a year, year and a half. And in the long run, adding to the housing stock through new construction is even more important than more inventory coming from existing homeowners because of the housing shortage, or rather affordable housing. We have the houses. We have 15 million vacant houses right now. It's just affordable, available houses is what we need. Recent readings have shown reasons for optimism. I am hoping this momentum will continue into 2024. Mortgage rates are held in check. Rising mortgage rates in 2022 and in 2023 were perhaps the biggest reason for the housing market being stuck in neutral. And I'll say the bank bailout was the reason it's stuck in neutral, because it would be declining. We already had deflation happen in the housing market, but that all stopped the moment the banks got bailed out. Look at the timeline of all of this. It stopped going down the moment they bailed out the banks. That is a fact. You can call it seasonality. You can call it whatever you want. But when people talk about prices going down only because of seasonality and don't bring up the fact that banks were bailed out, they're taking out a huge piece of the pie, a huge part of the equation here. Anyways, it's unlikely rates will fall anywhere near the 3% range we saw in 2020 and 2021. Thank God. We do not need low interest rates. We need elevated interest rates, at least when everything settles down. Not right now. When everything settles down, I believe as long as we're in the 5%, about 5%, I think we're going to be okay in the future, at least without another economic crisis that we do not want and should not hope for. Well, okay. A continued slow descent, or even rates holding more steady in 2024 would be a welcome break after an unrelenting rise in unpredictability the past 2 years. Households need a chance to plan their finances. That's a big difference in attitude from just buy now. Just buy now. If you rent, you're a loser. Where's the solution? You've been talking about this for almost 2 years. Blah, 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 blah. You guys, when we're on the sideline, at least what I'm doing on the sideline is I'm increasing my purchasing power. I'm saving money. I'm rearranging my life. And honestly, I'm confident in doing it, even though I do not want to keep renting. Next paragraph. Rent growth stays stable. And I disagree with this greatly because of the overwhelming amount of apartments being built right now, and that will be coming to the market within the next year. There's an explosion right now with apartment building. U.S. rent growth has stabilized at just over 3% year over year, slightly less than the long-term average. Wild swings in rent growth over the course of the pandemic made it tough for renters to find stability and budget for their future. And higher costs have made it harder for renters trying to save for a down payment. And one of the ways you can save for down payment, guys, is by rebudgeting how you save money. I'm telling you, 90% of the people that are watching this can save a lot of money if you just stop right now and rebudget. Not everyone can do that. Keep in mind. So if you can do that, you are blessed. It now takes the median household 4 years longer to save up a 10% down payment on a typical US home. And I want you guys to think about that. It's not saying 4 years. It's saying 4 years longer. That's a long time to save 10%. Rent growth was also a major contributor to inflation. This more balanced, sustainable path for rent growth will do more than help renters save for a down payment or another life milestone. It would strengthen the Fed's case to loosen monetary policy and cut interest rates. Now, here's the crazy one. This also hit me by surprise. Now, obviously, the bank bailout helped this, but the labor market. Okay, now I know they're trash jobs, but back in the GFC, we didn't even have trash jobs. I mean, literally, you couldn't even get a job. Right now, if you get laid off, you can usually find a job, but it's a job that you don't want. So even though people are getting crappy jobs they don't want, it's still, you have a job to get. It's way different having a job that you don't like versus not having a job at all. And I can tell you that because it happened to me. A strong and sustainable job market. Amid a turbulent economy the past 2 years, the job market has held strong. Real wages, which fell You guys, it fell, not up, it fell in 2022 as inflation soared. It grew in 2023, and now we have quantitative easing and layoffs going on, so that was short-lived. While job growth has slowed, it has not turned negative, and the unemployment rate remains below 4%. Astonishing. For housing affordability and household financial health to improve, it's important that the job market holds its mild strength so the soft landing, so often talked about, can be achieved. So again, and I like how they're acknowledging that the only way we head to a soft landing is if the labor market is strong. It can't even be mildly strong. It has to be really, really strong, because we all need to make more money to keep up with the inflation, specifically with rent, shelter, and houses. Lastly, more ways for first-time buyers to build credit. This is interesting. Over the years, Zillow research has shown the importance of credit access and credit scores in the home buying process. Improving access to credit and making it easier to prove credit worthiness will allow more households to make the move into home ownership. We can't control the macro economy, but we can build ever better market places. So they're saying going into 2024, it's going to be easier to build your credit. But what I'm saying is it's not going to be easier in 2024 to build your credit, because most people are drowning in credit card debt, and there's a whole bunch of people getting laid off. Bankruptcies are soaring, delinquencies in every category of consumer debt minus conventional mortgages is skyrocketing up. So I think what they're talking about is like you're now able to use rent and utility payments to prove your FICO score or your credit score. I think that's what they're talking about. But as far as the ability for Americans, normal consumers, to like increase their purchasing power, that's just not going to happen. In fact, you're going against the odds here. And that's why I've made my home buying course. That's why I'm constantly telling you guys, work on your purchasing power and understand your local housing market. Now, one last article here on the top 10 hottest markets that Zillow believes is going to be in 2024. So they're basically saying, you guys, and here's a list right here. All right, so I'm going to read these bullet points and then we're going to go over the list. 2024 hottest markets all boost solid economic fundamentals. So now they want to talk about fundamentals. What about price fundamentals, huh? What about that? The PE ratio of the house prices. What about those fundamentals? What about income versus price? Can we talk about that, Zillow? No? No? Okay, whatever. Relatively fast-moving for sale housing inventory, plentiful, likely buyers, and expectations for stable home values. Okay, number 2. The Midwest, Great Lakes, and South are home to most of 2024's hottest markets. Cincinnati, Columbus, Indianapolis, and Providence tops this year's list. So let's take a look at the list right here. And first thing I want to point out about this list is nothing's on the West Coast. Look at that. Absolutely nothing's on the West Coast. The West Coast is absolutely doomed. Everything for the most part is in what, basically the East Coast, Northeast Coast, right? That's crazy, you guys. But anyways, the number 1 hottest market they're saying is Buffalo, New York. Interesting. Number 2, Cincinnati, Ohio. Number 3, also Ohio. Very interesting. Columbus, Ohio. A lot of things going on in Ohio. Number 4, Indianapolis. 5, Providence, Rhode Island. 6, Atlanta, Georgia, which I will be touring along with Charlotte. I will also be touring Charlotte this month. Number 8 is Cleveland, Ohio. Another Ohio. Number 9, Orlando. Interesting. And number 10, Tampa. Honestly, I think Tampa is going to get hurt this year. Time will tell. And then the article goes on, you guys, about price growth. Home values slowed in 2023, fueled in large part by the highest mortgage interest rates seen since 2008. Only 15 of the 50 largest markets are expected to see home values grow in 2024. And this is really kind of, something I'm excited about, because we know how bullish Zillow can be. And they're saying that 15 of the, 15, you guys, only 15 of 50 largest metro areas are going to see home values go up in 2024. Think about that, guys. Inventory and velocity. The inflow of new listings in 2023 slowed dramatically from last year, keeping for sale inventory at multi-year lows. It's likely that these low inventory markets, in which buyers had the hardest time finding a home, and homes generally sold very quickly in 2023. This will continue to experience outsized demand relative to supply in 2024 to compare to other markets. The markets with the fewest listing days per home in 2023, in other words, where the homes generally sold the fastest, were Hartford, Cincinnati, and Columbus. It's also interesting, guys, if you want to see what they're saying about demographics. Baby boomers and millennials represent 2 enormous generations, and both are very active and, I'll add, very different in the housing market. Baby boomers are hardly exiting the market as they age, a departure from previous generations at the same age. And millennials are aging into their prime home buying years as they hit their early and mid 30s. So overall, you guys, I'm impressed with Zillow's lack of optimism rather, and more kind of a cautious approach. They're saying that essentially overall values will decline, inventory will continue to go up, the golden handcuff will ease in 2024. But do me a favor, guys, let me know if you agreed or disagreed with what Zillow said, and let me know if you found anything particularly helpful in what we just read. And also, if you guys could do me a favor, share with us below your intel on your own local housing market. Let us know what you're seeing as far as like bidding competition, as far as prices, and as far as inventory. And don't forget, you guys, let us know what metro area you're in. We get a lot of great comments, a lot of great intel, but people constantly forget to tell us what metro they're talking about. So I'm very interested to hear from you. And other than that, guys, if you're out there investing in real estate, you know that I wish you luck and I hope you win.